saying that Bitcoin is going to get to $100,000 sounds like I am crazy, but in this video, I'm going to show you how it's actually pretty easy to get to 100,000, and I'm going to show you how we're actually right on track and it's well on its way. So stay tuned. All right, welcome back to the channel. So if you're new to the channel, I like to talk about business, investing, and overall success. We mostly talk about investing, which is the only way to get ahead in life. You have to live on less than you earn so you can save your money and you can invest it. You have to make money when you sleep, like Warren Buffett said, or you'll work until the day that you die. And we do that through investing. Talk a lot about Bitcoin because I believe Bitcoin is the best investment that we have ever seen. It's been the best performing asset for the last decade. And if you focus on it like this, maybe you're missing the picture. And so we're going to talk about that. All right. Now, because I've been writing and researching about Bitcoin and cryptocurrencies for 4 or 5 years now, talking about them, on YouTube, etc., I get asked all the time. People always want to ask me, where is the price of Bitcoin going to be next week, next month, at the end of the year, etc. And the thing is that I don't like predictions. I don't like to try and guess. But of course, as an investor, we do have to guess, right? So as an investor, how do I determine if the price is going to be, it's a good price to get in? And I have to determine what that future value will be. Now, traders look at, technical analysis. They look at candles and they look at patterns and it tells them if there's going to be short-term movement. But as an investor, as a fundamental investor, I'm looking for fundamental reasons that would cause the price of the stock or the company, the asset, whatever, to go up in value. All right. So when we look at that, we are, I guess you could say we're making a prediction, but we're doing it over long periods of time. I believe that trying to guess where the price of Bitcoin is going to be at next week is impossible. Yeah, you can look at some technical analysis, but when we look over a longer term picture, when we look over years, the picture becomes a lot more clear. It's kind of like if you've ever watched one of those movies where they have a time machine, they go back in time and they say, don't touch anything, don't touch anything. But if they touch one thing, right, even the smallest little thing, and then they go back to their current time, back to the future, maybe the world can be totally drastically different. And so that's kind of what we like. We can see like rules, regulations, things happening today, and then we can project where that will be in the future, not in a week, not in a month, but in the future. And so I believe the picture is more clear over the long term. Now, when you look at Bitcoin, like I said, zoomed in, you're not really seeing the full picture. And so really we need to zoom out on Bitcoin, and we can look at it in the log scale. So if you look at the price of Bitcoin over years, or really since the beginning, zoomed out in a log scale, you can see that the price of Bitcoin is actually still right inside of its channel. So it's really doing exactly what we need it to do. Of course, it's going up and down, up and down. It's volatility. The price goes up and down. Now, volatility is a good thing. We need volatility. We need the price to go up, right? How does Bitcoin go from zero to $130 billion without volatility? It has to. And because it's so small, it's so new, it's mostly being driven by collectors, really by speculators at this point. It's going through what we call price discovery. And so it's pinging and bouncing around between reality and perception. And it's going to find that price discovery. And eventually it'll get that volatility range will get smaller and smaller and smaller and smaller as the asset gets bigger and bigger and bigger and bigger. But there's a few different ways as a fundamental investor we can look at Bitcoin and go, okay, forget next week or at the end of the year. What is it going to be worth in a year, 2 years, 5 years, 10 years, etc.? Now, if you watched my other video that I did for Thanksgiving where I said, I gave you the information that you're going to need to talk about Bitcoin throughout the holidays. I'll go ahead and link to it right up here. So you'll understand what are the fundamental drivers of Bitcoin, all right, and why Bitcoin is going to be used more and more, why it's going to be more popular. But we can also look at the price of Bitcoin. And so an analyst inside the Bitcoin community, Plan B, I've talked about his stuff before in other videos. And if you've been following him, maybe you're already aware, but he put together a chart that he calls the stock to flow ratio. Now, he got that stock to flow from a book called The Bitcoin Standard. Shout out to Saifedean, who wrote that book. It is an amazing book. I highly recommend everyone to read it if you haven't already. It's not just about Bitcoin. It's about money. It's about the history of money. It's about everything that's ever been used as money all the way up to current day. And so it's a must read. You have to read this book. And then, of course, it talks about Bitcoin. Anyway, so he talked about the stock to flow ratio, which is the stock, which is the amount of gold that's above ground. or the amount of Bitcoin that's out above ground today, and then the flow, which is the new incoming, that's the inflation. And we look at things that have scarcity, like gold. Gold's valuable because there's scarcity, there's only so much of it, and we can model that. So Plan B has taken this scarcity, this stock to flow ratio, and modeled it. And he's taken gold, he's taken silver, he's taken other precious metals, and he's mapped them out on this chart. And as they get more scarce, the value goes up. And so just a couple quick points is that gold has a number of 62, and that means it would take 62 years of mining gold to replace the current stock. With silver, it's like 22. With Bitcoin, it's like 25. However, what happens is Bitcoin is going to cap out at 21 million, right? So it caps out. And the way that it does this is every 4 years. So right now there's 12.5 Bitcoins coming out of every single block every 10 minutes. Every 4 years, that gets cut in half. And so in May of next year, that 12.5 is going to go down to like 6.25. And then 4 years after that, it cuts down again, and on and on and on and so forth. And so he's taken this halving event, and he's looked at it, measured it with the stock to flow ratio of other precious metals, and he's come up with a number of Bitcoin being worth $50,000 by next year. Now, through the last 10 years, the price of Bitcoin has tracked to the stock to flow model perfectly. Now, not exactly perfectly. You can see that it goes up a little bit and down a little bit, up a little bit. So it's not perfectly in line. And of course, those are opportunities for us to buy and sell if you want to trade a little bit. However, you can see it's followed this stock to flow model perfectly. Now, of course, as we always say, past performance is no guarantee of future performance. And so just because it's tracked perfectly for the last 10 years doesn't mean it will continue to. And I'm going to show you why it doesn't even really matter. So that's one model. We look at one thing. Now, what is Bitcoin and why would it have value even in the first place? So the stock to flow model shows you why it's scarce and show this halving schedule and how it could be worth more money. And so I'm going to link in the show notes to the full report done by Plan B, and you can read his whole analysis because it's pretty compelling. But let's take a step back and look at why would Bitcoin be worth anything. Now, again, if you go back and watch that other video, how's Bitcoin doing, you'll understand a lot of the fundamental drivers of what's pushing it. But if we really break Bitcoin down to its most basic, what is it? It's the most secure computer network in the history of the world. We have $130 billion that's sitting on an open network, unprotected, unguarded. Anybody has access to it, permission to it, and it's never been hacked. It's never been down, and it's never been hacked. Now, everybody's being hacked. Experian's been hacked. Everybody's information leaked. Right? Target was hacked. The CIA was hacked. The NSA was hacked. When they hacked the NSA, they stole the NSA's hacking software. So even the NSA, probably the most secure network in the world, couldn't stop from being hacked and stolen. Yet Bitcoin, which is completely open, completely permissionless, 130 billion is sitting there, has never been hacked. So it's the most secure platform computer network in the history of the world. We can just stop there. What is that worth? What is it worth? Let's look at this. So the most valuable company in the history of the world, or currently in the world right now today, is Amazon. They were worth about $1 trillion. It's down a little bit today, but let's say they're worth about $1 trillion. And Amazon's a platform, right? I can list stuff and you can buy stuff. So that's cool. It's not really revolutionary. It's not the most secure platform in the history of the world, but it's worth $1 trillion. So could the most secure computer network in the history of the world be worth as much as Amazon, $1 trillion? Definitely, but it could be worth even more. So let me show you how we're going to break this down. I made a couple notes. Shout out to Brendon Burchard. I'm stealing what he does. If you don't watch Brendon Burchard, you should. He talks about human performance, which I love. So how does Bitcoin get to $100,000? All right, I'm going to break this down for you right here. And so the first thing that Bitcoin does is Bitcoin is like a lot of things, right? And so Bitcoin is like a money, it's like a currency, and it's a store of value. It's fighting to become a store of value. Now, what do we use as a store of value today? Gold, right? So gold is a store of value. Gold's been a store of value for thousands of years. The central banks are buying gold, etc. Most of the reasons why somebody would buy gold are some of the same reasons that somebody would buy Bitcoin. Now, the baby boomers, etc., they're still buying gold. They still want something physical, tangible. They want something they can hold in their hand. And I know the comments are going to start flying down below that Bitcoin can't be worth anything. Gold's worth something because gold I can hold in my hand. I get that. If that's you, go ahead and leave your comment down below and tell me that you only like gold because you can hold something in your hand. But you have to understand that there's young people out there. I have little kids. My kids are growing up in the digital world. Digital things have value to them. They will probably never buy gold. All right. They like something digital. So what's going to happen is, again, the same reasons why you buy gold will be the same reasons that you buy Bitcoin. However, I get it, right? Some people only want stuff that you can hold in your hand. Some people want digital. So at some point, though, Bitcoin will start eating into the gold market. And today, the gold market is about $10 trillion. Now, I'm not saying that Bitcoin takes all 10 trillion, but it could take a little bit of that 10 trillion, right? So again, Amazon's worth $1 trillion. Gold is worth $10 trillion. Now, after gold, 10 trillion, we have offshore banking. Now, what happens is really rich people want to put their money into other bank accounts, like Swiss bank accounts, for example, Cayman Islands, etc. And they do that to get it out of reach of their government. And of course, it's worked for a while. We know that in the offshore banking, there's about $30 to $40 trillion sitting there. Now, they move it into offshore banking for what? To get it out of the reach of the government. And what does Bitcoin do? It gets it out of the reach of the government. So the same reason that I would open up an offshore banking account would be the same reason that I would buy Bitcoin. And we can see that offshore banking isn't what it used to be. So Switzerland used to be the safe haven for that. And we've seen recently, like Russian oligarchs have had like $500 million seized out of their Swiss bank accounts. They could put $500 million into Bitcoin and it could not be seized. So we know there's 30 to 40 trillion parked in offshore bank accounts. They have the same reason. So it's reasonable to expect that we're going to get some of this to come over into Bitcoin. Now, the next thing, currency markets, currencies, the US dollar, the euro, the yuan, etc. Currency, we have about $80 trillion in the currency markets. So as a lot of people, myself, a lot of other people are taking their fiat currencies and turning it into Bitcoin, we're going to start taking some of this 80 trillion, taking that out and putting it into Bitcoin. All right. In addition, you can't store your money in fiat currency, right? We know that the dollar is losing its value super, super fast, 95% of its purchasing power in the last 100 years. We can see, obviously, in Argentina, Venezuela, it's losing purchasing power even way faster. And so what it's done is it's forced us to take our money, and instead of storing it in the bank, is we have to buy investments. We have to buy real estate. We have to buy stocks. We have to buy all these things. And so if we have a currency, we can't hold these currencies, but if we have Bitcoin, maybe more people, instead of buying real estate, instead of buying stocks, because it's complicated, it's time consuming, maybe we just put it into Bitcoin and hold it. Could take some of that. I'm not going to total that up. But if we add all that up, all right, so if we add up the gold market at $10 trillion, and let's say that we just take 10% of that market, only 10%. The young generation, they don't want to own gold. They take a little bit. They take 10%. And then out of the offshore banking, 10% of that, that's 4 trillion. In the currency markets, let's say that it gets 5%. 5% of people buy Bitcoin. All right, right now we're 1 or 2%. It's not unreasonable to think we'll get to 5%. So if you add that up, 2%, 10%, 10%, 5%, that gets us to $10 trillion that Bitcoin could become. Now at $10 trillion, one Bitcoin would be worth $500,000. Now, I just said, how does Bitcoin get to $100,000? But as you can easily see, it could easily get to 500,000 just by taking a little bit of each one of these markets. Now, will that happen? We don't know. I don't have a crystal ball. But as an investor, I have to look at fundamental reasons why an asset may go up in value. And those are the reasons why it may go up in value. Now, why would people choose to use Bitcoin over offshore banking or over gold or over a failing currency? Well, again, go back to watch that video of how's Bitcoin doing. You'll see all those drivers, right? We know that currencies are failing left and right. So already in some countries, they're already bailing their currencies to go to Bitcoin. We know that offshore bank accounts are getting seized. And so, again, we know that people go to that. We know that gold, et cetera. So the situation, the global macroeconomic picture is pushing people into these. And so to get 10%, 5% is not unreasonable. And as you can see, that's 500,000. We're way overshooting our goal. Now, one thing to keep in mind is that depending on what country you're in, you're most likely looking at Bitcoin priced in your currency. So if you're in the United States or you use the US dollar, you're measuring Bitcoin in the price of US dollar. You're measuring gold in the price of US dollar. Now, what's important to understand about that is that depending on what country you're in, your currencies are losing value even faster. Again, if you're in Argentina and you're pricing Bitcoin in your local currency, et cetera. And so as the currencies continue to fall, it's possible to see Bitcoin go up even higher. If the currencies go down to zero, the price of Bitcoin can go up to infinity. So, for example, if you were pricing it in the, in Venezuelan dollars, right, the bolivars, you would have seen it go up to infinity, right, because the value is going down. So potentially it could go up even higher if it's priced in whatever currency you're pricing it in. But anyway, that's how we get to $100,000 Bitcoin pretty easily as a fundamental investor. Those are the things that you're watching for. Does that make sense? If you like this video, give me a thumbs up on it. If you don't like the video, give me a thumbs down. Tell me why. Put a note in the comments down below. I love to talk to each and every one of you. I reply to every single comment, of course. And that's it. To your success. I'm out.